Good. So, greetings everyone. Sadly, the bad news about China don't stop. It was last week that Cathy Wood announced publicly that the ARK Fund, the ARK Investment Management Fund, sold many positions that they had on Chinese companies. And today, you can see, is August the 12th. And the bad news continues. We can see here the headlines, Bloomberg.com, China signals more regulation businesses in coming years. So it seems that the Chinese government has no fear in declaring to the world that they want to continue this trend. This is not what happened in this first semester of the last part of the first semester in 2021 is not a mistake. It's not a temporary thing. It's going to last. It's what they say now. Maybe they will realize that they are on the wrong path from an investing standpoint, because attracting capital, these are not very good moves, guys. If we look at the chart here, we have the FXI ETF, the Chinese large cap ETF. Some of the greatest Chinese company like Tencent, Alibaba, Meituan, JD, Baidu, they're all included here. And if you look at the 1 year chart, you are in a loss of 3.71%. Almost 4% if you bought at this date, August the 12th, last year. So this is enormously underperformed the S&P 500. There's no comparison with it. And if you look even worse, if you look from the peak, in the middle of February, this lost more than 20% of its value. And it's the same if you look at the other ETFs like QUAB, the Intern Chinese ETF, the CQQQ. The problems with investing in China last since China was open to the free market and became part of the WTO, the World Trade Organization, in 2001. The threats of delisting from the U.S. toward Chinese companies in the American stock exchanges continued for long. They've always been there, not just with Trump. The listing for what? Because they're used to less strict norms when it comes about publishing their results, so the transparency. Alibaba received this threat, for example. Alibaba, which has been the biggest IPO on the New York Stock Exchange recently, in the recent years. So, and last year in September, the Ant IPO was banned. I mean, the government prohibited Alibaba because it was a sort of Alibaba startup from, listing on the stock exchange and at the stock IPO. So these problems continue. Have always been there, but the situation now is getting worse and worse. I certainly hope this is not gonna continue for long, but the signs are not so positive. So I honestly have Chinese companies for the reason that you can see basically in the videos that I published with Manish Babrai. Basically low PE ratio and great competitive advantages in that market, and that great market because it's almost 2 billion people, and the great investments that both the government and the companies have made in technologies like AI, AR, and robotics, and blockchain also. Honestly, I'm still a believer that China has some good investment opportunities. I think you should keep a lot of attention to this conflict between the government and the businesses, but it's an ongoing thing. And like if you look at the past, as I said, it's been going on for long. So China today is much more capitalist, as we all know, than it was, and of course, the government claims to be communists. So if for reasons of internal order, they can't just let businesses do everything they want. They of course fear these great entrepreneurs like Jack Ma to take their place because they became so popular, and they became a sort of heroes for the population. So the society is changing a lot. It's a country that's changing a lot, and it's changing fast. So this might be a temporary fall down. Of course, nobody knows. Now the question is, should you hold or should you sell? Or should you buy eventually? Let's take the case that you're not invested in China, or you're not invested at all. I suggest to you that the best investment opportunity is the United States of America. So get exposure to the US, buy some index funds like the S&P 500, and eventually start studying. I hope my channel helps in this. Start studying some other opportunities, some other individual stocks you can find in the US that may help you to grow your wealth faster. But also always do your own research. Let's say you're holding Chinese stocks, or you have to decide if selling them or not. Well, I think you have to decide if you have a long-term vision or a short-term vision. In the short term, which I consider to be from tomorrow to 6 months, to even a year, actually, I would not suggest you to buy for sure, and I would consider to reduce the positions. What I suggest is to be a long-term investor and to have a long-term vision. For my long-term vision, I tolerate a maximum of a 25% exposure of my portfolio in China. And I consider it very high still, but I tolerate that because I believe that there's a lot of things that still have to change in that country. For example, the GDP per capita is very low. There's still opportunity for growth. Remember the quote that says that money never disappears. Money just goes from a place to another. And so we should wonder, what is the other place? What are the other places if money goes away from China? The first answer is surely it goes back to the US. But it's not so sure. We have other possible answers, which are other emerging markets. What is China in the end? It's an emerging market. So the two possible questions are: this capital flows away from emerging markets and it goes back to the US and Europe, smaller part of Europe, or it changes from a state to another state, to other states of the emerging markets basket. Another state might be India. So an investment opportunity might be the INDA, INDA ETF, which is the iShares India ETF. So we should consider all these scenarios. Be flexible, see what happens. I have a long-term vision, and guys, I think for this video it's been a lot of things. I hope everything is clear. If you have any question, write them in the comment section. I'll try to answer to every comment, and see you in the next video.